Good afternoon. I'm Chris Swift with Swift Trading Company. On behalf of my partner, Chris Wimward, and our sales assistant, Sean Gammon, welcome to this segment of Shooting the Bull. We've had something interesting to take place today. We finally got into a positive basis with the feeder cattle market all the way out to the January and just working on the March contract and almost dead even. This changes quite a few ways of the way we look at how this market has been trading, where the futures have somewhat led the way on most of the rally. And then we saw a lot of the cattle feeders kind of have to bid up in order to acquire cattle. Now that we have seen some changes where we think that the cattle market in general has kind of caught up to itself, and whereas we've placed enough cattle on feed to carry us through the rest of this year and well into next year, we saw traders move distinctively the basis to positive. And what this means was that now we are trading the cash market for quite a bit higher than what the futures market is. So as you can see in the chart here, we are now trading as the feeder cattle index as of Friday's close, 243.99. The futures at 235.65. We've dropped a little over $15 in 3 trading days, leading to this event where we have now got the positive basis. Going forward, it will all be up to the index now, not necessarily the futures. The futures can run however much higher they want to, but again, as we see the index, if it does not rally, then we're not going to see that futures rally hold. If the index continues lower, the futures have no choice but to sit right there where they are or trade lower in anticipation of even further movement lower in the index. So right now, if we look at it, we've got a $15 move lower. There is the potential that this is the wave 3. Maybe sometime early in this week, we see a short-term bottom. We trade for several days, if not a couple of weeks, sideways, correcting this until we move into the first of the month. We get into November, and it looks to me like October could have as heavy a placement month as what we saw in September. So again, I think you're going to have ample plenty cattle on feed. I think you're going to continue with an increase in carcass weights. We're going to see more alternative proteins take advantage, and we're also going to see more imports probably take place. So I think that everybody is trying to get some piece of that dollar that the beef cattle producers are getting right now. So going forward, now that we've changed the basis from negative to positive, it's going to be a different picture going forward, and you won't have the futures to rely on that gives you the big pump up that says, oh, well, now we're really going to go higher because the futures are higher. The likelihood of somebody wanting to come in and bid the futures higher and the cash markets feeling that they're going to move lower, then it just sets up probably the wave for correction that you, I, and all of our listeners are going to try to market into. So take a grain of salt. Consider where you are, what you've made. If you need to make adjustments in your position, you might want to buy back calls that we recommended selling earlier when we put on our fence options strategy. If you wanted to still collect more premium, consider how low you might think that the futures are going to go, or the index. How low do you think the index will go? Sell puts at that level if you think that you can collect premium, and that's as low as it's going to go. But I think after this $15 drop, make some kind of adjustments in your position to capture some of this, knowing that there may still be a wave 4 correction and wave 5 to new lows yet before this is all over with. If you need some help, if you want somebody to talk to about it, give Chris or I a ring here at the office, and we'll be more than happy to take the time to either explain what I've just gone through or help you in any way that we possibly can. Y'all have a great rest of your afternoon.